Well, the jobs and manufacturing figures out of the States were disappointing to say the least. And as they rippled out, they wiped untold billions off the value of global markets. Also in the mix, another Moody's downgrade for Greece. They now make it a 50-50 chance the country will default. And a set of Chinese figures that show an economy that is not firing on all cylinders. Here's Emily Stewart.
It was a sea of red across local markets today as almost $31 billion was wiped off the slate. The All Ordinaries closed down 2.2% and the Aussie dollar also took a hit in the past 24 hours, dropping more than a cent to $1.06 at the local close. The fall in the markets was largely due to a slump in Wall Street overnight.
No surprise that given the experience in markets since the GFC, when we do get a shift to negative sentiment, investors tend to sell first and then ask questions later. And that's what we're seeing across the boards today. We're looking at every sector being in the red.
The Dow Jones Industrial Average and the S&P 500 fell more than 2% overnight, and economic data weighed on US sentiment. Manufacturing figures from the Institute of Supply Management came in well below expectations, dropping to an index level of 53.5 for May, around 4 points lower than economists' estimates. And jobs data from payrolls processor ADP also disappointed the market, with 38,000 new jobs added in May, the lowest number since September last year.
The market was looking for a number of about 135,000 jobs, and with that much lower reading, there are real concerns that the economy is not growing as quickly as a lot of investors had originally hoped.
And with QE2 to end this month, some economists are cutting their estimates for second quarter growth.
It is about confidence, with the U.S. government arguing amongst themselves about the debt ceiling, with higher gas prices, perhaps the dip in the housing market. There's a lot on people's mind, and hopefully we're getting a little bit of relief in terms of prices at the gas pump. Maybe that'll translate into some improved consumer confidence going forward, we hope.
It certainly has slowed. The question we were asking 12 months ago is there a global recovery coming through? The question that we're asking now is, what is the pace of that recovery? I don't think we've seen a stalling. We've just seen a bit of a cooling. It could well pick up again very soon.
But it's not just woes in the US affecting the Australian markets. Another Greek downgrade has also weakened sentiment as the European community struggles to come up with a long-term solution. The latest idea is a €70 billion stabilisation fund.
We're very concerned about the debt situation in Europe. It doesn't look as if there'll be a resolution anytime soon, particularly as it's now moved into the political rather than purely economic sphere. But the big driver for Australia has been the growth in China and India and other emerging nations. That reading on manufacturing we saw in China yesterday did not help the situation in Australia.
European and IMF officials are currently working on an assessment of